Whoa. It's wild. Wild. Mic check, mic check. 1 2 1 2. CTM. What a joy to be here with all of you on this Monday. So grateful for each and every one of you. By the way, first of all, a couple of things. It is extremely wild if we sit back and think for 1 second that the Federal Reserve is about to cut into GDP growth of 3% with equity markets at all-time highs. It's going to be a wild week, that's for sure. Don't forget expectations, or at least what the past suggests, or what the data suggests at the time of the first cut, that first month, is a lot of uncertainty into a recession. A lot of people think 2026 recession ahead. Some people think, hey, did 2025, April, May, was that something that they're going to roll back and say we were in recession then? I wonder. I wonder. Let's capture this rising loaf. Hey, listen, Michelle, Fabikia, how do you pronounce this, brother? Great to see you guys here. I echo this sentiment over here when you say what really matters, CTM. I am so grateful these past days, this past week that just passed into this week, to be able to have the presence of being able to execute off of our models, and regardless of what I believe is happening or what's happening around me in my life, just to be able to methodically allocate that capital and manage risk around it. Absolutely beauty over here. We're seeing Tesla launching, Elon Musk buying $1 billion shares of Tesla. That is interesting. And you can see that our model able to kind of foreshadow that momentum. Tesla new entry, currently riding into profit. We were just 100% into cash a week ago. And now you can see that, of course, we still have MicroStrategy on the sidelines. We still have NVIDIA on the sidelines. Both of those waiting to enter the market. NVIDIA flirting potentially here. It's just the CTM filter. Any upward momentum at this particular time, we will be into NVIDIA pretty soon as well. And MicroStrategy is clearly safely and protected out on the sidelines. Not close to an entry at this particular time, long or short. But nevertheless, TQQQ and FNGU all of a sudden holding on to open positions, 5 and 6% into profit. And not the same with our Bitcoin and crypto. We saw that Bitcoin on the swing trading models, the 8-hour models, all took about a 2% profit out of the market, and rightfully so. That momentum here on the very near term has some downward pressure to it. Bitcoin bull runs still in the market right now, and Cardano current position running against it almost 5%. Ethereum also holding a position right now, about minus a little less than minus 1%. Boom, 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 boom. There you go, right? A lot of people looking here for the peak 4-year cycle behavior. We did a fantastic video not too long ago, a few weeks ago, and we dialed in and gave the exact 4-year cycle behavior, let's say awareness, so that people would just be, dare I say it, ready, aware, right? A lot of people think that we're about to enter into that blow off phase as the Fed begins to cut. Guys, remember, the data doesn't suggest that that's what's going to happen. The data suggests, I just want everyone to just kind of have this as we're getting close here. Wednesday is FOMC day. Is the Fed cutting into recession? Is the Fed cutting into normalization? They're not panic cutting, right? That's off the table. Are they cutting into normalization? GDP growth 3%. A lot of people are worried about what the ramifications of the Fed cutting are, and they look towards that being higher inflation. Down the line are you going to see inflation at 4% by the end of the year? No, you're not, right? If they're cutting into a recession that first month, you could see equity markets come off a couple of percent. Everyone's aware of the data, and if you're not, I'll bring it up tomorrow, hopefully, and what it's like when the Fed is cutting with markets, just off their all-time highs. Spoiler alert, 12 months out, it's extremely bullish. Could this time be different? Of course, this time is different. People are just not seeing that. A lot of people are looking for the same, right? And that is you're going to see a blow off top in the next 60 days, and granted, when that doesn't happen, people are then going to look out and say, well, by the end of the year. And then when that doesn't happen, they're going to be like into the first quarter of 2026. All those things are going to happen. However, past the first quarter of 2026, if anyone is still in denial, then I'm sorry. There's nothing we could really do about that and help. People like to say that nothing has changed. This is, by the way, something that starting in January 2022, we first presented. Here we are now, and as we've entered into the ultimate market opportunity, what does that mean? S-curve adoption, jumping the chasm of adoption from the early adopters to the early majority. Yes, Wall Street is here. We now have spot Bitcoin ETFs. The market is extremely different, and it has matured. By the way, we have said that eventually everybody is going to go ahead and embrace our view. Our view for sure amongst the earliest I know of, bar none. People say nothing has changed. Nothing's changed with the 4-year cycle. Well, yes, price did make an all-time high prior to the halving for the first time ever. That was something different. That was your first clue that maybe something has changed. Now it's true. Market could peak, blow off top, right? Into October, right on time. A lot of people are looking for it. A lot of people are expecting that we're about to go parabolic. If you remember, I remember last cycle, November, December 2021, Bitcoin was set up to exhibit that 4-year cycle behavior. We didn't have a blow off top though. That was another hint that things were potentially changing. That's what led us into, by January, figuring out what was ahead. We've said, and I say, by and we just said by the end of the year, people are going to, then they're going to go to first quarter. Soon enough, everyone is going to talk about the maturing nature of Bitcoin, and they're going to talk about how this is no longer a retail driven boom and bust, right? Remember, we said retail does not matter this cycle. They are irrelevant. Stop looking at Google Trends to see if retail is participating. They're irrelevant. The new retail is these small corporates, buying $50 million worth of Bitcoin, buying $300 million worth of Bitcoin, buying a $500 million worth of Bitcoin. That's the new retail. Guys, we got it from here. Thanks for everything you did. We'll take, no, we're not going to let them. But either way, here you see Blackware coming in and beginning now. We said everyone eventually is going to embrace CTM's view. They're coming in and say, God, you know what? We're the experts here. Yeah. Don't forget, I, I am so happy to be here with all of you. I am so happy to engage and consider everyone's viewpoint. Blow off top coming in October. Guys, Max Payne would be obviously there's no blow off top, and then market corrects 80%. That would really be Max Payne. But I look and I say, well, God, we just traded at 74,000 in April. We just had a 30% correction. Why do you see the market going to 160 and then anyway? I'm going to continue to lean into what we do because it seems to be a little avant-garde, a little ahead of its time. And I think that's where the alpha is, right? Now, whether you're talking about our mechanical trading, our hive mind collaboration, strategies that put us on par to compete with the best of the best. Now it's up to you to be able to have that fortitude, that maturity to execute everything. So they're talking about the evolving shift. I want to go ahead. I just want to share a few things with you. I think that's really cool. So first of all, they do talk about the ETFs, right? We say, well, what's different? The advent of the spot ETFs, and we're seeing now Wall Street is here. We know that the corporates are obviously a tremendous player in the market today. They talk about, and this is all things that obviously we've articulated. Drawdowns are no longer catastrophic, right? Bitcoin's largest drawdown to date in the bull market has been 30%, around 30%. Now, I personally don't believe that's going to be the max drawdown going forward. I believe when the markets come under severe pressure, and the markets will come under severe pressure again. By the way, there's a lot of things I would like to refute out there. I'm not going to do it right now. Like 4-year cycle, everyone here understands the maturing nature. Everyone understands what 4-year cycle behavior suggests into September, October. Everyone here understands the evolving nature we're talking about. Other people talk about, no, it's the global refinancing cycle every 4 years. I'm like, okay, guys, you caught on late. You caught on late because the nature of the global refinancing cycle has changed. The US is just rolling over the past few years, short-term duration. That has tremendous ramifications. It's the liquidity, and it's about to go out. Well, as central banks are beginning to ease, you think that that's not conducive to liquidity? You think it's about to go out? Yeah, all of us fall into recency bias. You all know that normally by the time you figure out a pattern and everyone figures out a pattern, it comes to an end. We need to be forward thinking. We need to be looking at what's taking place and stay ahead of it. Diminishing realized cap. Inflows into Bitcoin realized cap now translate into predictable. There's nothing predictable about the markets. Proportional increases in market cap. How much market cap has Bitcoin added in the last year? $600 billion. That is absolutely tremendous, proving the market has become more efficient. So anyway, drawdowns. We talked about reduced volatility on the downside. It's very important. I believe that we continue to see that. I believe when we do have the next issue the market faces, Bitcoin is going to be in drawdown. It likely eclipses the 30% that we've seen. But don't forget, I think that comes after first some upward momentum. Upward momentum usually leads to mean reversion. That mean reversion is going to happen. It's just going to be less than that 75, 85% we've seen in the past. I have no idea what that translates into. Is it somewhere between 40 and 60%? More than likely. Halving cycles have lost their edge, no question about it. Early on, there was a tremendous effect of the halving of the miner's reward, in so much as that the supply demand dynamics. right? Let me just go ahead and jump over and find the chart. And when you had that first halving, it had tremendous effect on the supply. The miners were the biggest player inside the space. And then when you're cutting in half the amount of reward that they're able to sell onto the market, shortly, very shortly after the halving, you see price skyrocket, not making all-time high, skyrocket. Fast forward, next halving, 2012, what happens? 6 months after the halving, new all-time high. What happens after the 2016 halving? Shortly after, 6 months after, price makes a new all-time high. What happened in the most recent halving? Price made an all-time high prior to the halving. There's obviously much less of an effect. But check this out. We all know all that already. This is what's cool. Bitcoin mirrors the path of other digital monopolies, like Amazon, Apple, Google. We've looked at a plethora of different assets undergoing S-curve adoption, right? Growing in a way to stability as adoption grows and the market institutionalizes. Here is the best way to visualize that. What's cool is that we've said that, well, everybody is going to go ahead and eventually fall into line. I've seen a lot lately over the past 3 or 4 months. I've seen people like Lynn Alden talking about the changing structure of the market as institutionals have entered the market, that diminished volatility to the upside and downside. That's where people are mistaking. Not when people are mistaking about that diminished volatility, yes, that means no blow off tops. Outside of an adoption event, do you know how much money would need to come into the market to cause a blow off top? Outside of an adoption event, such as Bitcoin Act being passed, which is, I don't know, it's something like that could happen. It doesn't have to come from the US. An adoption event is something that could cause price to begin a, a strong ascent to the summit. No question about that. Outside of that adoption event is, by the way, BLX stopped running. Here's what I'm looking for. BLX is stopped running. And let me just go ahead and just get rid of those prices so no one that's new here. And if you're new here, welcome. So glad that you're here. It is good that you're here. Guys, what we're looking at here, and you saw Blockware, is like, oh, now we see what's happening. Now we see what's happening. When did we see what's happening? Now we see what's happening. And here's what's happened. Yeah, thanks. Thanks for being here. You know, guys, diminished volatility, downside, upside. What does that mean? Does that mean that you're going to see that log scale regression and it's just going to, we love the influence of the power law out into the space and in the market. I think the flaw is pretty good. It could later on become a problem. The floor might be too low, but it's going to break on the upside. And the problem with that could be if people get left behind. That's our worry, right? Anyway, I don't want to get into that right now, but we've gotten to it before. We'll get into it soon. What I want to talk about, though, is that diminished volatility does not mean that price is going to roll over. And you could see that walk up. This is Amazon over here. And you could see it enters right over here into an exponential phase. And it's that walk up that we talked about. By the way, this is a nice 40% correction over here. Look what happened before that 40% correction. Price began the ascent up and then the mean reversion back into it. A lot of people looking about what's potentially going to happen. This is all my charts done on the BLX need to be redone here. I'm using now the Bitcoin all-time index. Unfortunately, I've not had the opportunity yet to go ahead and do that. This is the massive, massive Kager over here, 80%. I can't imagine how much longer it holds, right? Now, could something like this happen where it breaks the line? And we're going to have to look at that later. Of course, something like that could happen. Right. All as I know is until it breaks, and it hasn't broken since 2013, until it breaks, it's not different, right? We got to watch out for that. The ramification here is if that continues for another year, that's when people get left behind. If that were to continue, guys, equity markets here are defying gravity, defying seasonalities. This is a lot of people find. Remember, like September seasonalities. Oh, it's horrible for Bitcoin. And as soon as everyone noticed, you know, again, old recency bias, old patterns, break-in patterns. Is this time different? No, it's much of the same in many, many, many ways. But this is insane. As Fed's coming into a cut this week, is that ascent going to continue? Don't forget that first month of cuts generally leads to an unchanged month. We have to watch out for that. There's no question about that. This particular track remains the one before it, 1998, previous 2 years, 20% plus gains. That mirrors this current track, 20% gains. Both of them remain the two highest elevated tracks outside of a 20% drawdown. Our current track is the most elevated. Fed is looking to cut markets all-time highs, GDP 3%, and the passive flows continue. The buybacks continue. Those two factors is really the two main factors driving this market. By the way, I saw Sherwin-Williams, the paint company. Did anyone ever try to buy Sherwin-Williams paint recently? I guess the last time I looked at it must have been like 4 years ago, and it was extremely expensive. I was like, whoa, I can't imagine what it is today. They are, by the way, they just did $1 billion of buybacks of their stock in the past year, and now they're cutting their matching 401k contributions. That to me is something to watch. Now, Sherwin-Williams, not so much. If you begin to see that as a trend coming into the markets, that's something that could have massive ramifications in so much that affects the passive bid. Now, Sherwin-Williams, that could be a canary, right? That's why we're discussing it. So that if it begins becoming domino-like tomorrow, no. The months ahead, unlikely. In the year ahead, potentially. That's what we need to watch out for, things like that. Oh no, it's not even over, and we're entering into a spicy period. It's going to be spicy as the Fed begins to cut their rates. Our positioning has us on the right side. Grateful for it, and not out of the woods, right? Just because we're starting to see, and I forget Cardano. Cardano's not playing ball yet. We're if we see some carry, this could continue to be something nice and unexpected. But still, we could get some curveballs thrown at us. Listen, today, NASDAQ won't stop, and there's no way I would be positioned. Oh, by the way, did you guys see silver today? 42 and a half. That's biggie, biggie. Look at this. 44 is silver trading above 44 would be the highest in 14 years, bringing in 50. Woo. And gold just continues to be, after that last breakout, gold now oversold is just something's different. This has never happened before. Gold has never been this oversold, this overbought for this length of time. Got is that the same? No. What does it mean? What are the ramifications? Think about it. Let's jump in and take a look at what's going on here with ETH. ETH coming in, finding trouble once again with the previous all-time high, under pressure. So we got to clean this up a little bit. Can't get rid of that. I'm not adding anything to this. Just leave it as it is. All right, everyone. This is short and sweet. Lots of love with lots of love. We'll be back at it tomorrow. Jobs market needs to continue to be watched. A lot of people looking at the deterioration. in the not so real-time data, as all the numbers we get, we have to assume are just Fugazi, including the inflation numbers. So not easy to navigate, under those type of circumstances. Do our best, and most of all, we're going to continue to lean into momentum. Everyone, have a beautiful day. Short and light and sweet today. Coming strong tomorrow. Thank you, everyone, for all of your prayers, your supports. Grateful for it. Grateful for you. I'll see you all on the inside.